Hello and welcome to another update video about ADA. Yeah, ADA is now forming this C wave that we've been watching and waiting for. I know some people got frustrated with high B waves, but these high B waves are very common in a wave 4 correction. As I always highlight to you and explain to you. We then talked about the possibility that the B wave top had been reached, but that we would need to see a break below 54 cents to really confirm it. But it seems like that ADA is already on its way. We had the break of the ascending wedge pattern, and I'm now labeling this as a first 1-2 setup in wave C, which means the third wave is likely still in the making. So a C wave, yeah, is a 5-wave move. So if the assumption is that a third wave topped, the third wave of this diagonal we've been talking about now for a while, the assumption is that this third wave indeed topped here on the 9th of December, yeah, on Saturday that was. Then obviously we had our A wave down into the support area, had a positive reaction to it, an overshooting B wave, which stayed well within the boundaries of what I normally communicate a high B wave can do, which would be to reach the retracement, the 1.38 retracement of the A wave. So that was reached, or that wasn't even broken, I should say. Yeah. So what we do is we measure the length of the A wave, then pick our retracements, and technically it would have been allowed to move all the way up to 71 cents. Now that's not a target, it's more like just a retracement or resistance zone, yeah. And that was never broken, so the idea of a high B wave is absolutely justified, and especially because the B wave, or what I have labeled as B wave, is just a corrective move. See, it's been a corrective rally, very corrective on the way up. Certainly not impulsive in any way, yeah. So an impulsive move up would have looked differently. There are certain rules and guidelines that it needs to adhere to, for example, to avoid overlaps, yeah, overlapping price action here between these waves. But there is an overlap, and therefore we see this as just simply a high B wave. The move down has then started after the high that was reached, and I have labeled, as you can see here, that move down as a first 1-2 setup with a very, very shallow wave 2, really. Yeah, as you can see here, very shallow wave 2, and the third wave down is likely unfolding right now. That is the third wave of the C wave. So what are common targets for such a third wave? So let's put that onto the chart. Common targets. So normally we're looking for minimally, I would be looking for the 1.236 in a C wave. That's the minimum, that's 52 cents. Better would be the 1.38 or even 1.618. So we're talking about the area around 50 cents. 50.9 cents is the 1.38 extension. 1.618 is 49 cents. Yeah. And in between, we've also got the 23.6 retracement level. That's on the support side. This here is a projection, basically a forward projection of wave 1 and which target the third wave should reach. Whereas these here are support levels based on the length of the third wave, yeah, that developed into the recent highs from the lows that were actually made in September. So if that's the third wave, then this is obviously a fourth wave, and there are certain standard support levels. What we should do, we should always have those support levels, know when support will break, which is going to be between below 34.5 cents, which means that the current wave count is technically, well, likely actually, until that 61.8 retracement level breaks at 34.5 cents. But that would already indicate quite a lot of weakness if you imagine that the fourth wave comes down all the way, yeah, to the lower boundary line of the trend channel and to 34.5 cents. I would prefer for the price not to break below the 50% retracement at 38.9 cents. That would already be a very, very healthy wave 4 correction. Again, there's no must to even get there, but you need to distinguish between the extensions and the retracements. Best to use both, and then to see where there are areas of confluence. What I can tell you is that this move down certainly doesn't look as if it is stopping. Okay, so that's essentially what we want. We want the healthy ABC correction. And once we have all 5 waves complete in the C wave, and it might take a couple of days to get there, Then we can watch, okay, is the next move up starting? Is that next move up already unfolding, which is a fifth wave? Or is it just an ABC structure? And this fourth wave needs to be actually down here. So after an ABC structure, the question is always, especially if it's not deep, okay, was this just the A wave of an even larger ABC structure, or is the wave 4 complete? The problem we will have, and that's just the nature of these diagonals, can't do anything about it, right? It's not a highly reliable setup, or not good for anybody who seeks absolute precision. The next move up is likely going to be a fifth wave in a diagonal. The fifth wave is going to be an ABC structure. An A wave can be a 3-wave move. So what is going to be tricky is to determine when the wave 4 is going to be over. We will not be able to easily tell the difference between this B wave or the wave 5, because both will be corrective rallies, possibly, okay? So just be aware of that. Just want to warn you about that. So it could take a while until we really can distinguish between, okay, this is already the wave 5 or this is the B wave. That's just, just the nature of the market at the moment. Yeah, don't think there is much more to add, so I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.